Hi, welcome to Main Street Macro. I'm Neela Richardson. In the month of March, it can be really hard to know what type of coat to wear, isn't it? Is the weather going to be on the warmer side? Is it going to be on the cooler side? Well, the same can be asked of the economy, with Main Street finally making that transition from a pandemic-oppressed winter to a vaccine-liberated spring. Is the economy running hot or cold? Well, the answer is both. When the Federal Reserve met last week, it said that the economy was running much hotter than it expected the last time it met in December. Yet there were some hard-hit sectors that are still feeling the chill of COVID-19. So in a very real way, some parts of the economy are running hot and some parts are running cold. Let's discuss 5 areas where this is happening. And let's start with number 1, housing. Housing has been hot since the summer, but there are some signs that it could be cooling off a bit this spring. Well, for one, there is a shortage of homes on the market that are for sale. 2, we've seen a recent pullback in new construction. And 3, there's been a slight increase in mortgage rates. So all of these trends could actually cool down some of that white-hot home buyer demand that's characterized the post-pandemic housing market. Number 2 is the stock market. Stocks have had a speedy recovery from their pandemic drop, and they're already at record highs, 10% higher than they were at their pre-pandemic peak. We expect this warming trend to continue in the stock market, but we should also expect a dip into cooler temperatures on occasion as the markets try to assess whether the Federal Reserve will keep interest rates at super low levels. Next up at number 3 is business investment. And here we've seen some good news because business investment has actually climbed back up to its pre-pandemic levels. And that's good news, even though consumer spending is the lion's share of the U.S. economy. The amount that businesses spend on capital is also a key driver of growth. So you never know, a warmer business climate could be the hot trend of the spring season. Well, that brings us to number 4, the labor market. With 9.5 million workers still sidelined by the pandemic, the jobs market may be one of the coldest places, if not the coldest place in the U.S. economy. But even here, we've seen good news because after 2 months of declines, last month, we saw a burst in hiring from restaurants and from bars. That could be the start of a long, hot spell in hiring, and we hope that happens. And that brings us finally to inflation, number 5. Inflation is still moderate, but is likely to warm up a lot as the economy improves. However, right now, it doesn't look like there is a risk of overheating, especially as long as the labor market stays chilly and wage growth stays modest. Together, what this all means is that the economy is warming up, but there are some cold patches, even in sectors that have seen some improvement, but may still be wrestling with the lingering effects of COVID-19 when it comes to supply shortages or curtailed consumer spending. So the punchline for Main Street is yes, you can ditch your winter coat, but make sure to bring a sweater. For more of our insights on the week ahead, please check out the Main Street Macro blog at adpri.org. Thank you for watching and be well.